Good morning, Team Top Step, my futures family. It's time for the market prep. Today is Tuesday, July the 18th. My name is John Hoagland. Thank you for trusting me with your time. Our goal on the market prep here is always seeking accurate context, always thinking about risk management and remaining patient in our trading. If you're already in the markets, hopefully things are going your way. We did have some economic information come out this morning. Retail sales came out higher again for the third month in a row, but with a slight miss on the expectations. Retail sales was expected to come out at 0.5% higher. It came out at 0.2%. Core retail sales, which is without automobiles, they were expecting 0.3% higher. It came out 0.2% higher. Still higher, not as much as they were expecting. At 8:15 Central today, we're expecting industrial production, and 9 o'clock business inventories and housing market index. As far as what futures traders and investors around the world are focusing on, well, U.S. stock futures were steady to open, looking to open steady to lower prior to today's bank earnings and economic information. It looks like they're still kind of hanging just below the close from yesterday. Although yesterday the Dow posted its highest close in over a year, the highest close of this year. So the blue chips kind of catching up to everything else, maybe a little bit. Crude prices have centralized, awaiting fresh inventory data that it will start to get this evening with the API numbers and the EIA numbers tomorrow. I'm going to get my mouth moving this morning here. So as far as earnings today, we had some of the bigger banks, Bank of America, Morgan Stanley, Charles Schwab, all beating expectations on both categories. Lockheed Martin, a defense contractor, also beating expectations on earnings per share and revenue. A couple of the smaller banks that came out today, as we've kind of been expecting, had some misses as far as revenue is concerned. But again, I think that's somewhat expected and probably already in the market. This afternoon, we have Interactive Brokers coming out, and we know we have some biggies tomorrow afternoon. Wednesday, we have Tesla, and what else is coming out tomorrow? Tesla and Netflix due out tomorrow after the close. So we'll be looking forward to seeing how those come out as earnings season really starts to come into play here. The VIX this morning is up slightly at 13.59, a little bit lower than it was yesterday at this time, however, at 13.95. The dollar index still below 100. 99.75 was 99.94 yesterday. These, of course, may have changed in the time we've been talking. This is the last time I checked them. And the yield on the 10-year slipping lower still, 3.77% was 3.8% at this time yesterday. And as always, we ask that you make sure and hit the lucky like button, share, comment, question, feedback, heckling, love, and are always welcome here. Make sure you subscribe to our YouTube channel so you can get notifications when we do go live. We've got our coach's playbook on hold for a little while till we begin to open up Top Step TV, which should be the beginning of August, and we're looking forward to that. Good morning, everybody. It's always a pleasure to see you. Good morning, futures trading today. Caprice, Tachyon. Well, it's good to see you back, Tachyon. Dan Trader, Duke, Matthew, good morning. Stephen, James, Josiah, good morning. JD, Mark, Alejandro, John, Shaw, Scott, Sawney, Concord. John Doherty is with us this morning. Good to see you. The rooster crowing this morning. Jason, good morning. Rusty Golfer, my brother Rick, the Randolph to my Mortimer. It's good to see you this morning. I love you. Alfred, Will, JD, Robert Harrison, James, Jim, Nasdaq, Bill Phillips, Jason Lewis, Kevin, Hagel Matters, Timothy Marks, Kieran, Michael, Albert, JT, good morning to you, and to Bluebell, good morning, Brody, good morning, Stephen. I always notice when Sarah Hall's not here, maybe she's got something going on today. Hope things are going well for her. Dr. VJ, it's good to see you this morning. We haven't Make Hope Money this morning. We are not. Make Hope Money is on a little bit of a hiatus until Top Step TV starts, when we're going to be showing you a lot more live trading when Top Step TV begins. Good morning, Daryl Colby, Nasdaq. TSTV going to be, and yes, it will be on YouTube. Yes, good question, Nasdaq. So we've got some things going on in the markets. We're going to check out these things in the charts, but just remember these products are risky. We're not making any calls or any suggestions for the purchase or sale of any of these products. Again, just trying to put these markets in some sort of context where we can begin to hypothesize any outcomes and put a strategy in place that fits that hypothesis. It's, again, great to see everyone this morning. Why don't we, we're rehearsing this month, like High School Musical. It is like a High School Musical, and we are working on getting a smooth broadcast for everybody. So things look good, and I think it's going very well. I think we're all going to enjoy bringing it to you, and we hope that you all enjoy watching as well. So let's jump carefully into the charts this morning. The E-mini S&Ps. Well, what direction is it attempting to go? Obviously, it's attempting to go higher. It's still attempting to go higher. How good of a job is it doing going higher? It seems to be struggling a little bit here, doesn't it? This market needs new motivation, new business, new something to continue this move to the upside. Yesterday, we added 3,300 in open interest. So there was that implication that buying is still coming into this market, but it's not doing very well, is it? We've got lower volume yesterday. Volume has been kind of cutting off up here, which usually doesn't alarm me in the equities. When it goes higher, volume tends to be a little bit lower. It always seems to come in on the downside. So I'm not really that worried about the volume. But what seems to be happening for the last 3 days is this market has been struggling to hold rallies. It has been bringing in open interest, but not that much. Volume, again, has been low. 3,300 additional yesterday seems a little bit inert. This 5% off the all-time high put in our high yesterday. If we add this, we can see here we got within 5 ticks of this 5%. Mentioning yesterday that this market, that traders, investors, all of them have this level on their charts. And when they are looking at a level, they tend to bring price to that level. We got up there and we fell off pretty hard. Take a look at the 30-minute chart. Anybody noticing a pattern? We had a rally here, had trouble holding the rally. Overnight rally here, a lot of trouble holding that rally. A rally here, a lot of trouble holding that rally. Now we've got the retail sales information that is out. The markets are now responding and digesting that information. We're getting a little bit maybe short here in pre-open, overnight inventory, maybe, but we're in the middle of the range and in the middle of values. So that's going to probably put me back in my seat and say, there's maybe better trade locations as the day goes on here. Yesterday's rally, although it looks formidable, I'm giving a C- because it didn't bring volume. Volume was very slow. And a 3,300 change in open interest, yes, that's positive. It's buyers. Maybe those are the weak laggard buyers that are the last ones to get in on the move. Take a look at the TPO chart. All right. Well, we have excess on both sides, almost an attempt at a spike lower yesterday, day before yesterday. That would have been on Friday. Yesterday, the market left the opening range at the low of the day. It struggled all day to move higher and higher and higher, didn't bring volume, didn't bring open interest, and left excess in the regular trading hour session at the high here. Is that the case? Yes, it is. Regular trading hour session high above an important or up to an important inflection level brought in sellers. Okay, normal variation, neutral trading day, not a very confident profile. Why? We've got lots of little things that are sticking out or holes in this. It's not showing a very confident move in either direction here. Again, the initial balance and the opening range were the low of the session. We had a pretty decent upside move, centrally located, well, relatively centrally located points of control. Looking for this market to seek new direction. The question is, which direction? It wouldn't hurt the upside move to see this market pull back a little bit. I don't get to choose that. All I'm doing is looking at what's been going on lately. We have a pattern that the market's been struggling to hold rallies. A little bit of new information today. Earnings were good. There's no reason for the earnings to scare this market. Retail sales were higher, just not as much as they were expecting. So without bad news, at some point, this market, could just continue to push to the upside. We talked about that yesterday. We didn't have any real overnight inventory. The market opened and left the opening range at the low of the day. It opened outside of value, a little bit out of balance. So the market found legs to the upside and is continuing to try and push higher. What did value do yesterday? Value stayed constant. We put in a higher high, we put in a higher low, but value high, value low remained constant to Friday on an attempt to continue the move upside. It was not very successful. Back to the TPO chart. Excess, our high, our low, overnight high and our overnight low, basically kind of right inside value from yesterday. So again, stay patient. Stay patient. Let's take a look at the Nasdaq now. The Nasdaq's move to the upside yesterday was a little bit more successful than the S&Ps. The direction is obviously higher. Performance, I'm still giving this longer time frame auction a kind of a B here. It's more successful. We're going to look at the continuation chart here for the Nasdaq. We still haven't reached that 5% off the all-time high level that we did reach in the S&Ps. That may be something to kind of keep in the back of your mind. Here's that daily chart. Weekly kickoff high is above. And I've got an article that was written by somebody who watches the market prep occasionally. Kevin is his name. And I think, he wrote this article in his what is it? LinkedIn, in his LinkedIn, and he sent it to me, and I asked him if I could kind of use this because he explains the market, the weekly kickoff levels, and the way I kind of look at markets in such a good way. I think that it's important for people to see it. It's just a 5-minute read, and you might find it interesting if you have questions about these weekly kickoff levels. They're inflection levels. They're levels that I think the longer time frame traders will need to adjust inventory. So I've put that link in the chat. Hopefully it's going to work. Read it at your leisure. I think it's a really good article, and I think I think he explains a lot of this even better than I do. He's a chartered market technician. He knows what he's talking about. Give the article a read, and it'll give you a better understanding of the way things and what we look at here on the market prep. Okay, so here's the 30-minute chart in the Nasdaq. Overnight inventory mixed. We're in range. We're in value. We don't have any inventory. The market is opening in balance, which tells me, again, patience. I think there's a higher probability of better trade location coming after the open throughout the day than anything that I need to be very aggressive for in the morning here. All right. We know that it's FOMC meeting a week from tomorrow. A lot of traders will be positioning and hedging themselves, preparing for whatever happens there. It might be a big nothing burger, but we always have to be prepared, correct? Value high, value low, value high. Value didn't change. The market attempted to move higher, but failed to bring value higher. This upside auction is giving signals that it is beginning to struggle. Holding rallies? No. Did it hold the rally yesterday? Maybe a little better than the S&Ps, but still not all that great. I'm giving yesterday's upside auction a B minus. So it did perform better yesterday than the S&Ps. However, it didn't perform all that well. Here's the TPO chart. Excess low, the initial balance or the opening range, I think, was relatively close to the low of the initial balance. The market attempted to move higher. It did leave an excess high. That excess high did happen in regular trading hour session. And remember, sometimes if a recent or all-time high happens in the overnight session, that's usually targeted in the regular trading hour session. We don't have that here in the Nasdaq and in the S&Ps. So it's a normal variation trading day. Again, is it confidence? No. Holes, anomalies, anomalies. The upside move yesterday was timid, and I think that's exhibited in volume and in open interest. Now, this market can certainly continue this push to the upside. All it takes is some new business, some new information. I think there's still plenty of money out there to keep this rally going, but it might actually be healthier for it to have some sort of a pullback before we continue the move to the upside. Sometimes the market will get too long to rally. You need an adjustment of inventory in the move in the form of consolidation or a pullback before the rally can continue. And we're all, I'm sure, hoping that this rally in the equities can continue. What about crude oil? All right. The crude oil is in rollover. We're obviously in the September contract. It's got more volume that rolled over yesterday. But that's going to make volume and open interest very, very blurry. Losing 36,000 in open interest yesterday is probably more a function of rollover than anything directional in longer time frame. Our longer time frame traders are concerned more about making money or at least getting a cheap roll done than they are worried about directional activity. Look at the location of where price has come this week, and including starting last week. We got a reversal pattern here. Last week's high, last week's low are these purple lines. We're in the middle of it. This is where the longer time frame wants this market so they can cheaply roll their contracts from the August, even sometimes the September month, into future months. The crude oil contract trades out 10 years into the future every month. There's so much open interest that is involved in the future. It becomes very difficult to gauge, especially during rollover, what it all means. Sometimes the picture is a lot more clear. During rollover, it is very blurry. Longer time frame balance is saying that this market is continuing a move to the downside. Medium time frame, we're in balance and centrally located. Here's the 30-minute chart. Recent high is in the overnight session. That may come into play at some point. The market's going to try not to leave that there at some point. Overnight inventory, I think we've pretty much reconciled that. We are at the low from yesterday. Overnight low, the overnight low from the previous session, night before last. Interesting area here. If we can't reject range from yesterday, I would look for a move to rotate back to the overnight high, maybe value high from yesterday. This does look like an interesting area here. Let's take a look at the TPO chart. Okay, so we have a uh, normal variation day, somewhat. Volume point of control is very low here, so I'm going to call this an extreme. We had a low excess low, 3 TPOs, higher excess high. The IB is neither the high nor the low. We did close the gap yesterday. That's one thing we did do. We also closed a previous gap. So there's no island top up here. Market kind of reaccepting value from yesterday. The only thing that I can suggest is, anything can happen, but I'm going to demand a good trade location. I only want to trade close to points of invalidation, points where if price reaches here, it's telling me that the trade is probably wrong and I'd better get out. Now, those are points of invalidation. All right. Let's see here. Gold. So here we're at one of those situations that you might be interested to read that article about weekly kickoff levels. Gold is currently working to accept or reject above an important inflection level in the weekly kickoff high. We had a bull flag that we pointed out yesterday. We've broken out of that, and now we seem to be holding above that trend line on the daily chart. We'll see that on the 30-minute chart here in just a second. A stab at the weekly kickoff high in extended trading hours. Okay, we lost 13,000 in open interest yesterday. That follows suit with a bull flag. We break out of the bull flag. Our next hurdle is weekly kickoff high, and it's going to be somewhat pivotal today. Here's the 30-minute chart. Okay, so here's the bull flag. Lower volume, lower open interest, lower volume, lower open interest, lower volume, lower open interest. An overnight breakout, a pullback to it prior to the open here. No, actually after the open here, was a pretty good opportunity for us to look for a long against that level. This is what I'm talking about, folks. This is a resistance. It's 1, 2, 3 points of contact, 4 points of contact, finally accepting above it overnight. Now it becomes support, 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 and the 8 o'clock bar comes all the way down to it, gives us an opportunity to limit our risk. We can risk 10 points on this. We want it to hold that line. If it doesn't, it might be wrong. And now look at where it is. We've got 80 ticks in it right now, and we're up against another inflection level. Here's the TPO. And looking nice and strong. We've got a gap to the upside. Don't forget weekly kickoff high technically is 1972. 1972. What was a good song from then? Well, probably Stairway to Heaven was probably still very popular on the radio in 1972, but we are testing that level now. It makes sense right now that it's the volume point of control so far is 1972. It is the weekly kickoff level. This is an important level. We're looking for longer time frame traders to adjust inventory, whether they're getting out of shorts or buying it and getting long, or getting out of longs or getting short in the opposite direction. Watch what happens, even if you don't participate. There's something to learn here. I'm going to skip the euro this morning, but I want to take a quick look at the 10-year because it is also testing an important inflection level. We had a reversal pattern down here. We had excess. We've come all the way back to this area of balance. This weekly kickoff level is based off of profile information, technical analysis, a little bit of tea leaves and chicken bones and math. And this is an important area. So just kind of wanted to point it out today. Volume and open interest have been dead up here. This market is now going to be seeking new levels to facilitate trade. Remember, that's the market's job, is to facilitate trade. It needs new business to continue above this move. It needs new business. It needs rates to break. It needs rates to be lower, but that's not likely. So using this level, we may find some decent opportunities really in either direction. Here is the 30-minute. See, we've got excess at the high here on that 30-minute chart. The market is now holding below that level. This kind of expands our risk in trying to get into anything, is that spike that happened at 7:30. But the market centered there. The news came out. It looked higher. It looked lower. It looks to be rejecting that level. We've got a kind of a gap situation. I don't think we've closed the gap yet, but there has been an attempt. This is an important level, ladies and gentlemen. Just wanted to point it out to you. And let's get down to business, right? So hopefully that link is going to work for you. It doesn't seem like I got that whole link in there. We use pig bones now. Sorry, Rooster. I forget. I got to stop using chicken bones. Looks like you got a good poll going here. You guys prefer the dark charts. We used to use dark charts on the market prep. And it was suggested that it was easier to see the lighter charts. So, but we can certainly change them. Doesn't make any real difference to me. Yeah, see, Rusty Golfer is kind of mentioning that he uses dark himself, but the light charts might be easier for demonstration. And that was suggested many years ago when we first started doing this market prep. Let's see if this works. Yes, it does. Okay, yeah, that link will work. So when you get the chance, read Kevin's article. It's a very well-written article, and I think he does a really good job, again, of explaining what the weekly kickoff levels are for and what they are about. So let's come to the dark side. We have cookies. It's always that awkward feeling when you do come to the dark side and you don't see any cookies. All right. Let's take our deep breath. Stay humble, grateful, creative, and centered in your trading. It's very difficult to make anything beautiful if you're not centered, and that's what we want for you. It's making something beautiful, like some good profits today. So have a great session. We'll see you later. Get out there and profit. And as our founder and CEO always says, always trade for tomorrow. Have a great session. We'll see you later.